Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights and inspiring stories. Today, we're going to explore mutual funds and ETFs, two powerful investment tools that can help you navigate the financial markets with confidence. So, what are mutual funds and ETFs? In simple terms, a mutual fund is a type of investment vehicle that pools money from many investors to invest in a diversified portfolio of stocks, bonds, or other securities. An exchange traded fund, or ETF, is similar, but it trades on an exchange like a stock, allowing you to buy and sell shares throughout the day. Both offer a way to spread risk and potentially earn returns, making them popular among individual investors and institutions alike. But why are mutual funds and ETFs important in the world of business and entrepreneurship? Well, for one, they provide access to a broad range of assets and markets, allowing you to diversify your portfolio and manage risk. They also offer a relatively low-cost way to invest, making them accessible to investors with varying levels of wealth. One key concept is diversification, which involves spreading investments across different asset classes to reduce risk. This is based on the idea that different assets perform differently in various market conditions. So by holding a mix of stocks, bonds, and other securities, you can smooth out returns over time. Another important principle is the efficient market hypothesis, which suggests that financial markets reflect all available information, making it difficult to consistently achieve returns higher than the market average. This idea has led to the development of index funds and ETFs, which track a particular market index, such as the S&P 500, rather than trying to beat it. Influential thinkers like John Bogle, founder of the Vanguard Group, have played a significant role in shaping our understanding of mutual funds and ETFs. Bogle's advocacy for low-cost indexing has helped make investing more accessible and affordable for millions of people around the world. Over time, our understanding and use of mutual funds and ETFs have evolved significantly. In the past, these investment vehicles were largely limited to institutional investors, but today they're available to anyone with a brokerage account. The rise of online trading platforms and robo-advisors has also made it easier for individuals to invest in mutual funds and ETFs, often at lower costs than traditional financial advisors. Let's look at some real-world examples and case studies that demonstrate mutual funds and ETFs in action. Companies like Vanguard, BlackRock, and State Street Global Advisors have built massive businesses around these investment vehicles, offering a wide range of products to suit different investor needs. For instance, the SPDR S&P 500 ETF Trust, an ETF that tracks the S&P 500 index, has become one of the largest and most popular ETFs in the world, with over $200 billion in assets under management. Another example is the iShares Core U.S. Aggregate Bond ETF, which provides broad exposure to the U.S. bond market. This ETF has been used by investors to generate income, manage interest rate risk, and diversify their portfolios. If you're just starting out, it's essential to understand your investment goals and risk tolerance before selecting a mutual fund or ETF. Consider factors like fees, past performance, and the investment strategy to ensure you're choosing a product that aligns with your objectives. It's also crucial to maintain a long-term perspective and avoid trying to time the market or make frequent changes to your portfolio. Research has shown that investors who adopt a buy-and-hold approach tend to perform better than those who try to time the market or make frequent trades. A study by Fidelity Investments found that investors who stayed invested in the S&P 500 index over the past 20 years earned an average annual return of around 7%, while those who tried to time the market and made frequent trades earned significantly lower returns. In addition, consider using tax-advantaged accounts like 401s or IRAs to minimize tax liabilities. And don't forget to review and adjust your portfolio periodically to ensure it remains aligned with your investment goals. Finally, let's talk about some advanced strategies for using mutual funds and ETFs. For example, you can use ETFs to gain exposure to specific sectors or asset classes, such as real estate or commodities. The VanEck Vector's Gold Miners ETF provides investors with access to a portfolio of gold mining stocks, while the Invesco DB Commodity Index Tracking Fund offers broad exposure to the commodity market. In conclusion, mutual funds and ETFs are powerful tools for both individual investors and businesses looking to manage risk and seek returns in the financial markets. By understanding how these investment vehicles work and applying them thoughtfully, you can achieve your long-term financial goals and build a more secure future. Thanks for joining me on this journey into the world of mutual funds and ETFs. Remember, investing is a marathon, not a sprint. Stay disciplined, stay informed, and always keep your eyes on the prize. Like, share, and subscribe. And remember, every great business starts with action. Make your next move count.